What's up everyone, back here for another video. So if this is your first time on the channel, hi, my name is Alex Temiz, trading for over 12 years, and I made over $16 million in verified trading profits. And the reason why I'm making these videos is because I bought every single car I wanted, every single watch I wanted, every single house I wanted, and now I want to find fulfillment from things that are not from material items and by giving back to the community. So let's get started with this video. So I want to start with a new series, answering MIC members' questions through videos. So I got a question from a member today, which I will leave anonymous. And basically he was saying that last month he made $100,000 trading, and this month he's down $30,000 and he's kind of losing his mind, right? He's like, I screwed up this opportunity, I screwed up that opportunity, and I don't know how the hell I'm down this month. I think that is a really, really important topic to talk about because I don't think a lot of traders understand that the market is not linear. What does that mean? That means that just because you made $100,000 in 1 month doesn't mean that you're gonna make $100,000 every single month until you die. If that was the case, I'd be retired by now. The reality is that the amount of money that you make from trading is not based on anything other than the opportunities in front of you. So if you have a month where there is unlimited opportunities, there is setup upon setup upon setup, that is your bread and butter, and then the next month, none of those exist, does that mean that you're a bad trader? Or does that mean that you were forcing setups that were not really there? What I wanted to tell this trader is I want you to think about trading like this. Were the opportunities this month that you drew down the same, if not better than last month? And probably the answer is gonna be no. The reason why last month that trader did so well is because every single thing that set up was perfect for their playbook and they hit it. And now they probably feel like, you know what? Last month I made $100. This month I'm gonna make $200, baby, let's go. But that's not how trading works. Every single day that you show up to the market, every single day or every single month that you show up, you have to ask yourself, what are the opportunities in front of me? And are those opportunities better or worse than last month? So one of the biggest examples happening right now is CAR, the big short squeeze that finally collapsed this week. Stock went from $100 to $850 a share. This was being hyped up as the next GameStop opportunity, the big short squeeze. There were two hedge funds, Pentwater and I think it was like SRS Management or something like that, that owned over 100% of the float because they were using options and swaps to accumulate everything. So everyone's like, oh, this is gonna go to 2,000. This is gonna go to 3,000. And honestly, for a second, I was kind of drinking the Kool-Aid too. I was like, maybe it's gonna go to 1,000, right? But what I realized is that when the most amount of people are talking about it is actually when the top is in, right? Or think about the inverse example. When everyone says the market is gonna crash, we're gonna go into World War IV, bazookas are gonna be flying out and whatever all it is, that's usually the bottom. It happened this April with President Trump and the Iran war. It happened last April with the tariffs. One quick lesson is if everyone is saying one thing, chances are you should probably do the opposite because most traders do not make money. It's like if someone's saying, oh, you know, this car is gonna go to 2,000, chances are it's probably gonna go to 200. And then when car's at 200, everyone's like, it's gonna go to 100, maybe then it's gonna bounce to 300 or maybe not. But regarding car, so I would say that was probably one of the biggest opportunities of this month, but it was very, very difficult. I would say that it was more difficult than GameStop because this car was up like almost 20 days in a row, not really a single pullback. It was super illiquid. There was like a $5, $6 spread at times. It was just very, very tough. And I probably talked to about 10 different 8-figure traders about that trade, right? Before it happened and after it happened. And most of them were like, dude, I've never seen anything like this in my life. You know, they were not really interested in playing it. They were kind of waiting for a clear signal. You know, after speaking to Lance about it, one of the clearest signals that we, came up with, mostly him, is previous bar lows, previous day's lows. So for me, whenever I'm trading a first red day setup, I need multiple days of extension. And the first day that it goes green to red, it'll usually trigger a profit taking. And that's when you want to go short. Now, because of Lance, I am layering in an additional criteria, right, for more aggressive size. And this is not supposed to be like a car trade recap video, but it's all gonna kind of tie together. So I would need car to go red on the day, and then I would need it to go under previous day's lows to then size up. So in the example of car, red to green on the day that it crashed was like 720 bucks. And then prior bar lows was like 570, which seemed like so far away. Broke that 720, broke that 570, closed in the 400s. Open the next day, crash to the 200s, and that was it, right? So I asked this trader, I was like, based on what you saw on the action on car, do you think that it was the similar styles of opportunities that you had last month? And the answer is no, it was way harder, way choppier, and way more difficult. So why the hell are you grading yourself based on a setup that is completely different than what was happening last month, right? Even an example like James, right? James last month, he made $80,000. And this month he's down like 15K so far, right? And I'm like, dude, that's really not that bad because last month was filled with opportunity. So I think what you have to remember as traders is do not judge yourself just based on your month-to-month P&L, right? Because that's irrelevant. The reality is that there's traders that can make their entire year in a day. You know, someone I know made $10 million on CAR on the short side, probably taking off for the next 3 months. And then in my brain, what I say is, all right, if he made 10 million and he's taking 3 months off, it's almost like he made 3.3 million, 3.3 million, 3.3 million, month 1, 2, 3. That's kind of how I equate it in my head. So what I told these traders, look, you made $100,000 last month, you're down like whatever, $20,000, $30,000 this month, which is $70,000 net P&L. Just make it seem like you made 35K last month and you're up 35K this month for your total of 70. Kind of tricking your brain into getting out of this drawdown mentality. That's the main thing that I want you guys to understand is not all opportunities are built the same. Not all setups are built the same. Not all months are the same. You know, historically, the summertime is usually a slow time for the markets. If January is an active time and you're making 6 figures in January, but the summertime is a slow time and you're not really making much money, does that mean that you suck as a trader? Or does that mean that the opportunities just weren't there that month? I draw down every April for like years. And you know, it took me a while to kind of realize why. And the answer is this: April 15 is tax day. And I usually pay millions of dollars in taxes because of my trading. And I try to use April to make that back. And then I get in trouble as well. To the trader watching this that is drawing down, you have to ask yourself, are you drawing down because you are deviating from the process? Or are you drawing down because the opportunities are not the same this month as they were last month, right? And I think that's super important. If you are going through a drawdown, what can you do to improve it? Because I think that this is super, super important as well. First things first is you have to size down, right? This is a lesson that took me very, very long to understand because when I would lose money, my first initial instinct, man, was to make it back as fast as possible, man. And I got killed. My biggest loss ever on TOP, which is around 450K. You know, I've made videos on this, but pretty much I ignored every single rule I had. I added to a loser, I scaled into a loser, I got stubborn, and you know, I deserve to lose, right? Now, what did I do the next day after that? So the next day, I came in with what I would call bully size. I started trying to bully these stocks to make the next round of stocks to make back the money. And what ended up happening is I made like 70 or 80 grand back the next day. And I'm like, all right, 3-4 more days of this, baby, we're back home. What happened the next day? Next day, I lost 100 grand. And I was like, now I'm drawing down even more. That taught me a lesson that I cannot bully these stocks into making it back. I had to go back to basics. So counterintuitively, I had to size down. Why did I have to size down? It's because sizing down is gonna give you the ability to regain the confidence. Whenever you're going through a drawdown, this, not my hair, your brain gets broken. And that's what you have to fix, right? Because whenever you're going through it, as a trader, it's like the worst thing in the world, man. A drawdown is like the worst thing in the world. I mean, you could have like, knock on wood, your puppy could die, but sometimes that drawdown feels worse. What you have to understand about trading is you have to fix the mental aspect first. And the way to fix the mental aspect is you must size down and get back to basics, right? What is the basic bread and butter type of play that you consistently make money on? Don't start trading options. Don't start trading crypto. Stick to what you are good at. So what is that for me? That is shorting into resistance. Very basic. A day one stock that pops up, comes back down, and then at market open, it pops up, creates a lower high, short that lower high, and ride it down. So for me, it was very, very difficult mentally to go from sizing up and sizing up and sizing up to, you know, hitting new all-time highs in my trading, to now having to size down. It's like, how the hell am I gonna make the money if I'm sizing down? But at that first initial stage of conquering your loss, your job is not to make back the money. Your job is to fix the operating machine behind the trading. Let's say you own a restaurant and your restaurant floods. Your mindset is like, dude, my restaurant's closed. How the f am I gonna make all my money back, right? How am I gonna get my customers back? How am I gonna get the marketing to bring people in the door to trust the process and all this stuff? But what do you do first? First, you gotta fix the flood, man. First, call the plumber, call the whoever the hell it is, call your uncle to come bring a fucking mop and whatever the hell it is, right? And first fix that. Until you fix that problem, you can't worry about the customers and your money. So right here, fix Because if you don't fix this, then nothing else works. So size down and get back to basics. As you start to get a couple wins under your belt, something miraculous happens. You start to get your confidence back. Let's say you're a guy that you're nervous talking to girls and like you don't know really what to do. And then all of a sudden, eventually over time, you know, you keep talking to these girls, you get comfortable, one of them gives you a smooch. After that one time, you start to get confidence. Like, I kind of know what I'm doing. And the second one gives you a smooch, and by the third one, you're like, all right, you know, I'm kind of like, I know what I'm doing here now, right? So it's the same thing in trades. After you get a couple wins under your belt, your confidence gets fixed, and all of a sudden, you make it back. So I'm pretty sure that big loss that I had was in April as well. Let me actually just double check real quick. It was, bro, you can't make no. April 28, 2023. You know when I'm recording this video? April 25, 2026. April, see? April. So if you are going through a drawdown right now, cut your size, go back to basics, focus on consistency, fix this, and then the money will come. I know that's the answer that you don't want to hear. I know you're like, hey, Alex, how do I make the money back tomorrow? You know, how do I start selling NFTs to make back the money and all this stuff? But the honest answer is just time. When you plant a flower, do you think that by putting more water and trying to give it like that artificial sunlight light bulb that's gonna grow faster? Or do you think that the only variable left is just time? To the trader watching this that is going through a drawdown, to wrap it up, you know, ask yourself, were the opportunities the same opportunities? Probably not. Convince your brain that instead of, you know, making 100 one month and losing 30 the next month and being left with 70, is you made 35 last month, you made 35 this month. And then if you're going through a drawdown that is different than this, you know, if the opportunities were just as good, if not better, you know, you have to focus on not making back the money first, focus on sizing down, getting your confidence back, getting your consistency back, and letting time cure the wound, because that's the key. If you like these types of videos, I have live trading videos on the channel. Subscribe to the channel, leave a comment of some more video ideas that you want from me, and we'll see you on the next video.